Good afternoon, Scott Redler, T3Live. Welcome to today's recap. What a day. I'll tell you, sometimes it's more conducive to be an active trader. Sometimes it's better to be an active investor or a macro investor. It all is based on your time frame and your risk tolerance. And one of the main things we try and preach is to know your time frame, know your risk tolerance, know what you're looking to get out of the trade, and know what type of trader you are. Now, a lot of people who are on this site, you're a micro trader or momentum trader. There's so many different categories, but the bottom line is, that there is always something for everyone. So if you're someone that puts money into your 401k every month and you have a long-term plan, you know what, today was a good day for you. If you have a 529 for your college, education for your kid, and you've been doing it monthly, you're pretty excited today. If you're a technical trader, like a lot of us are, it probably was a bit frustrating because last Friday, the market closed on the dead lows, and then Monday gapped up. You couldn't really see it. It wasn't the right thing to do to be long, but it happened, and I think they actually voted on this ECB move over the weekend, so I wonder who knew. Maybe Bacchus got involved if you saw the 60-minute special, but anyway, and then yesterday we failed at the 50-day, which is technically a little bearish, so some guys went short overnight, including me. And then you had this news, and today was just a gap and go, ended on the highs, and now it seems like it can continue now, especially considering historically December tends to be one of those months that are strong. So we went from having the worst week since 1932, the week before Thanksgiving. Now we're down not even 1% for the month. So a lot of different headlines, shaking and baking. But the bottom line is you can be a stock picker. You can make money from the stock market if you know your time frame. If you take a quick look at the spiders, you will see a few different patterns, and you see how they change. On a micro level, okay, this was that wedge pattern that we were talking about. This was a new direction, and that's when it broke to the downside. For more longer-term investors, like we talked about Stephanie Link and some people who manage a lot of money, this was a decent spot as it held this prior level with a 61.2% retracement to buy back. So if you sold 124, you were able to buy back into this area. It was hard to do, but you did. And now today, obviously, was just an explosive day. So if you kind of regroup here and look at the patterns all over again, you will see that there's a bit of a macro pattern developing on a different level. Another wedge type pattern, but it's like a longer term time frame. If you connect the dots like this now, okay, you do have a low, you have a higher low, and then you still have, I guess you could start it here. You have like a macro wedge coming in to this overall market. And it's definitely not the most calculated pattern, but as you can see on a longer term time frame, the market's trading in a pattern of indecision, not getting anywhere as we deal with all these headlines. The headlines out of Europe, the headlines here and out of Washington, some of the bank problems. So lo and behold, there are lots of different ways to maneuver this. It all depends on your skill set and what you're doing. Some people have just been holding the whole time. They were even holding when it looked like we were going to break this 1100 way back when on that reversal. And then there are some people who are still long based on this reversal, and considering that we held that last level, that was pretty important. But anyway, within this pattern, there are only ways or certain things how you can act. You can't control the markets, you can control your actions, and if you did come in short, you had a bit of a window. I covered my shorts in the spiders around 124 because I said I'm not rolling up this short, I'm not fighting this tape saying, everyone's printing money, they're issuing more debt to deal with the debt, it's not going to work. Who knows, maybe it doesn't work 6 months from now, 3 years from now, but again, we're market timers, so don't fundamentally think how they're kicking the can down the road and it's going to fall off a cliff. If you fight this tape, you could be insolvent before that happens. But we've talked about in Off the Charts, and we talked about in Morning Call, we always talk about stocks that are acting better, that are institutional or investment quality. Few of them that we talked about, look at MA and Visa. MA, right near the highs, actually closed at the highs, above all the moving averages. You could be a stock picker and holding, not just trading, and you made some decent money in MasterCard and Visa. Alex has said it many times, we've talked about it many times, these two stocks are always spoken about much more positively than negative. Okay, as far as like tech, IBM, we talk about this one as being investment quality. It failed a few times short term at the highs, and pulled in, but still was well above the 200-day. It reclaimed the 50-day. It overall never even violated this level. okay, came pretty close. So overall, if you're just holding IBM, you're doing fine. And this is a candidate to break above 190. Lately this year, Intel has been acting better. You have a dividend, semis are in a decent space. They had good news yesterday. Look at this wide range bar for Intel, near the highs. This is something you could hold. As far as some retail, we've talked about Walmart, we've talked about Macy's, we've talked about Nike, Deckers. These stocks are all moving along just as well. So if you picked one or two of these, in your model portfolio, so to speak, you're doing just fine. Walmart, look at this move. This is what we talked about it earlier this week. If it broke above this, it can get some momentum back near the highs. This was your macro long, and if you bought it here and you're just sitting in it, you should never really got stopped out. If you're a momentum trader, there are a few different shorts and longs and some entries, and this was your last one. You look at Macy's. Look at that, Macy's. Alex talks about this all the time. Almost near highs. You can be a stock investor. You can be a stock picker. If you look here at Nike, we talked about this the other day. Look at this. Nice little flag pattern. Not great action today, but this is also just short term. But overall, near the highs. A lot of guys have mentioned Joy G, a different group. Look at this stock. This looks pretty good also if it were to come up. And there you go. Nice day today. It's coming into some resistance and should clear it. And then the old highs are right there, above all the moving averages. An investment quality type of stock. If you look at some of the industrials, they're not near their highs, but I think the theme that's going to be changing now, I think a lot of hedge funds are looking at these industrials as cheap plays that are undervalued, so maybe they start acting better into the new year. So maybe you want to buy a little of the XLIs. Look at this move, nice and clean. At some point, it should take out this area. Doesn't have to do it tomorrow, but I would think as long as it holds this gap, this could be on the move. CMI looks pretty good. Not great, but it had a nice day today, but a bottom feeder type stock. Caterpillar, we talk about this being investment quality a lot. This was that last descending channel that I talked about earlier this week in the morning call. We gapped above it, and held, and now look at us right back at the moving average. This stock, I would think I'd put a 90% chance, going out on a limb anyway, that it breaks through this resistance and it sees 105 at some point this year. Deere looks pretty good, breaking already above this area. It's breaking above this resistance. So this has room. I think this is something you could hold for the next quarter. So there are things you could hold if you have that time frame. If you're just actively trading, it's different. So you have to know what you're willing to do. Today, Apple, Amazon were both weak. That actually helped on a short-term level. They were good shorts. The market went up. Apple and Amazon didn't. Could have faded a little bit, made a bit of cash flow. Different type of trade. On a macro level, both those stocks still have a lot to prove. Apple right now, finally busted through this small area that I was talking about in the morning call and closed pretty well. It happened at the end of the day, but overall, get this away from this area, which is trouble. Next spot would be 383 to 385, and then we'll see what happens after that. Amazon, not great, but we'll see if we can get a bottom feeder trade if it comes above this. It showed some relative weakness today, so we'll see. Netflix is getting weaker by the day. Stock was down, not even green today, and it just closed off the lows, but I think guys made money shorting this thing today, or tried to. If you look at some of the banks, Goldman Sachs talked about it today, saying it's got some room back to about 98, which is right here. So really, Goldman Sachs is easy move. So the question is, what's these banks going to do, right? Are they going to come into resistance and stall, or are they going to power ahead? Look what happened the last time. At least it was calculated. Remember, we had this buy right here on Goldman right around 98, and then it was another buy around 104, and then this is when it got upgraded before this happened. So anyway, we'll see how it handles this area, see if it makes a lower high, lower high, and maybe it stalls here, and we'll see. JP Morgan had a decent day today. It broke above this small pivot. Some might even say now with the central banks printing and the support of all of them, that the shorts are going to scramble a bit in these banks because maybe there's not a hard default now. So maybe all that paper that was marked down, because they thought that they would be taking a haircut, it might not happen. So the banks could play catch up. Plus, if you think about a January effect type of play, it could easily be the banks because they've been so battered and bruised and thrown out the window. Perhaps I remember last year we played the banks really well from December through January, that they had a nice lift. Didn't continue, but it didn't have to. At that point, it was better to be an active investor or an active trader, not just someone sitting and holding. So there's different time frames to maneuver. So you're going to see headlines all over the board. You know, if you're trading in the firm today, and your parents will probably give you a call and say, oh, what a great day for the market today. You know, and you might have lost money short. Just let it roll off the shoulders. It happens. You know, a great day in the market doesn't mean it's a great day for a trader. You know, if you didn't make money today, days like today loosen things up. They bring attention back to the market. Hopefully that'll create volume. That'll make easier trades for us moving forward. It also shows that if you fall asleep on the market, you're never going to make money. So if you did your homework and you bought things into the weakness, especially some of those stocks that we talked about, which is why we talked about them, you're making good money. These things are near highs. You could have actually bought them, held them, and maybe even traded around them a few times. So all in all, don't be frustrated. Don't start banging your head against the wall that you didn't make money on such a day like today. These type of days are tough. And I know Sperling did a great job today. Actually came in flat, made nice money. He saw the first pull-in. We did the sideways consolidation, and then we had the continuation into the close. That is a strategy that the good book follows, and the market actually did that today. You know, we opened up about 400, we hovered all day, and then we closed on our highs. If you take one more quick look at the spiders just for an intraday, I'll show you, you know, there was definitely some trades in here. Here was your gap up, okay? This is actually where I think I covered the majority of my shorts because I was like, okay, I want to see if they could pull them in at all, and they didn't, so I covered right into this area. I said, I'm done with this trade. And then you had a nice sideways move all day long, absorbing this big gap up, because look at the size of this gap up. This is very, very big. And then this was your afternoon entry. Always happens at the last hour, right? That's why they call it the hour of power. Well, after this long consolidation, you could have rebought above 124 and still made $1.20 in the spiders. So you could have used your intraday tactics to make money as an active trader, you know, even if you didn't come in long and make this big move. Or you could have even covered, switched gears, and then traded for this close. You know, I just sat out the end of the day because I wanted to switch gears and I wanted to start preparing for everyone here on how to move forward. So that's my job as the offensive coordinator. I can't be involved in everything. I could just try and get everyone on the right page, thinking clearly, so you could maneuver better moving forward. So all in all, again, go home, have a nice dinner, hug and kiss your family. Don't be upset if people think that you should have a rock star day because the market's had such a big, you know, type move. As an active trader, it's hard to see it coming, but overall, this should lead into better trading moving forward. It's been Scott Redler, T3 Live, the recap. See you at the morning call tomorrow with Jill. Have a great night.